Information out from the government this morning in the form of the grain export inspections. Let's go down the numbers and then we'll check in with Todd Horwitz at Bubba Trading. First of all, the corn, 604,592 metric ton. That was down just slightly from last week's 651,000. Sorghum this time around was way lower than last week. Last week we had 45,000. This week, only 5,676 metric ton. Soybeans were a big jump over last week, so it was higher again for the second week in a row. 1.94 million metric ton were inspected for shipment. And the wheat was down just a little bit from last week. Last week, 462,000 and some change. This week, 420,813. Let's go to the market now. And the corn market up by 1 to 2 cents on most of these contracts. December up 1 at 369 3/4. The March up 1.5, but the May up 2 pennies. Not the case for the soybean market. And this was a market that started out with a little bit of a higher trend last night on the overnight trade. January beans now down 2 and make that 3 3/4 at 893 1/4. March down 3.5, and the May down 3 1/4 cents. But that Chicago wheat market continues to perform to the higher side today. December up 12.5, March up 11 1/4, July up 9 1/4. Kansas City wheat, well, that market is higher also. December up 6 3/4. The July is up 7 pennies. It's at 4.55, and that's only a half a penny away from the high. Let's welcome in Todd Horwitz with Bubba Trading. Todd, earlier I was reading some of your tweets that you sent out, and one of them was alluding to the fact that here we go again with positive news from China. Whether or not this is the real deal, and it's anybody's guess. And it seems like the market has become kind of immune to these type of stories, still waiting to see the proof of the pudding.
Well, good morning, John. You know, I think you look at the equity markets, they're going straight up, so they're buying in. But of course, I continue to say, watch the grain markets, and more importantly, watch corn and soybeans. And corn is well off its earlier highs, and soybeans are now negative on the day. So that tells me that they don't believe that there's any deal near right now. So we continue to see, weakening prices. We've got a couple of bounces. Other than wheat, which is maybe possibly breaking out and may test the recent highs, corn and soybeans are extremely weak right here, and they look like they're going to stay that way for a little while. And I'm a little bit concerned, as to where they can go from here. Now, again, if we get a deal, they may go higher or not. But right now, they're telling us that they buy nothing into any potential deal with trade right now.
Okay, so now with the holiday here, we're going to have Thanksgiving on Thursday. Markets will be closed. Friday will be a short day where there'll be hardly much volume at all. Now that we're getting into this holiday season, do you expect this grain market just to kind of chop around here sideways and do much of anything, especially given the fact that the volumes will be so light?
Well, John, the volumes have been really light all along anyways, right? We've had it's really been a tough, fourth quarter, which is unusual in general to have volumes so light right now. Again, they're waiting for some reason to give them a reason to go higher. And I think, part of it will be when we start getting some real harvest reports, and part of it will be, there's some trouble in Brazil with their corn and things like that. So I think that might be enough to propel us higher. What we really need is to get the shorts off center and have them forced to start covering, which would create some volume and create higher prices. But right now, as they say in the business, the strong hands are the short guys right now, and they're pushing hard. They haven't been able to break them, but they haven't allowed them off the deck either. So they continue to push lower. But again, this lack of volume will turn at some point, and we will see, I think, a dramatic turn. But again, right now, it's just very frustrating for everybody, and it's just very quiet.
Okay, well, we'll see what's going on over the livestock trade. Todd, stay with us. We'll come back and analyze that next. Stay with us here on the Market Day Report. Well, Friday we had the cattle on feed report, the cold storage report, and the box beef trade was sharply lower. What about here at midday now? Well, the choice back to the higher side with the selects on the lower side. So we widen out that choice select spread. $1.24 higher for choice, 19 cents lower for selects. That gives us a $22.68 spread on a movement of 70 loads. In the pork cutouts here at midday, big story over here in the belly market. Carcasses up $1.88, loins up 91 cents, the hams down $2.58. and the belly market up $12.14 at 117.27. By the way, while we're on that topic, I do want to talk about those bellies. If we check back to last week on the belly market, we were in the trading around that range of 124.44. And then we started dropping, and what a big bounce here today. All right, now let's go to the futures. It's the live cattle futures up by at least $1, with the December up $1 and a nickel, the February 125.17, the April up $1.02 at 125.20. Now the feeder cattle market is at least $3 higher, with January up 3.22 at 142.50. March is 142.72. That's still not the high of the day. The high of the day, 143.13, but we're up 3.13, and the April up 3.10. Hog market not having such a higher day here, but it's not a complete dollar lower yet, with December down 48, the February down 78 at 66.88. Back to Todd Horwitz. Todd, what a wild ride it's been here over the last couple of sessions for this cattle market. The cattle on feed report came out, and now where do we go from here? Because it seems like the demand still remains pretty strong.
Well, John, we never thought that they should go down in the first place, right? And of course, that the street was pricing in a bearish report, which we got a bearish report. It wasn't a great report. However, look what happened. Look at the recovery in prices. And again, one thing we know for sure, doesn't matter what it is, price always determines the action. And it was easy to see that there would more than likely be a rally. And I think we're going to go up and test the highs. I'm looking for 150 in feeders. I'm looking for, 125 in February fats. Again, I think we continue to go higher. 130 in February. I think we continue to go higher. And I thought that was just a nice little sell-off, an opportunity to step in and buy some more. Because again, to me, everything looks good, at least out through the first quarter of next year. Now, again, certainly they could change any time, but for now, I think they continue to look great and they continue to look higher versus hogs continue to look weak. And of course, we'll look at February. If they break 66, they could get really ugly from here. It's already been a really ugly sell-off to begin with. So again, that's a pretty key area. Better hold.
All right, Todd, thanks a lot. Good to talk to you. We'll talk to you again tomorrow. Todd Horwitz, Bubba Trading, there in his office in Redwood, Illinois.
All right, thanks, John.